Hi, everyone. I welcome you to our discussion on this topic, which is events after the reporting period, which is Ind AS 10. Now, friends, the best way or the simplest way to understand this topic is to, let's say, address it, let's say, with the help of a timeline. Okay. Say, for example, I'm taking a time period of 1st of April 2020, which is the start of my financial year. Okay. Of course, it ends on 31st of March 21, which is my endpoint there, right? I know that for this particular period, which is my reporting period, right? I would prepare a balance sheet as at 31st of March 21, a statement of profit or loss for the year, statement of cash flows, statement of changes in equity, and of course, disclosures, right? Of course, this would be also done for the previous year, with all these sets of financial statements will be prepared for the previous year as well. The standard, which is events after the reporting period, actually talks about something which is happening after this date, right? Anything that is happening after the reporting period end. Okay, how do we deal with those events? How do we deal with those material events, right? If something happens, let's say after 31st of March 2021, so let's add to the timeline, for example 25th of April. Okay, just a date, just a random date. Okay, should I take into consideration something that has happened on 25th of April while preparing my financial statements for the year ended 31st of March 2021? Okay, that is something which is this question is the standard is trying to ask us. Okay, so one argument is that why should I worry? I mean, anything that is happening after my reporting period will be reported in the next accounting period, which is 2021 and 22. It would any which ways get reported there. Okay, so I should not bother. The second argument that comes is to report that event, to report that material significant event in the next year, right? If I'm looking at the full accounting year, after the period is over, it may not serve any purpose to the users because the event took place somewhere close to this date, and probably reporting or disclosing the information about this event for the financials or during the or in the financial statements for the year ended 31st of March 2021 could have served a better purpose there. Okay, so that's the entire underlying thought process behind having this standard, which is Ind AS 10. Okay, so the question that arises, if I were to report this, just in case I were to report this, if at all I'm reporting anything about this, then what is the kind of reporting or how is the reporting done for such event, and up to what date should I be going further? Because it cannot happen that I'm going to report something which is happening, let's say, for example, on 30th of March 22. I mean, I can't make my shareholders wait for the financial statements for the year ended 31st of March 21. Otherwise, I'll keep on doing something or the other. Okay, so that's the underlying context or the principle that we want to highlight, or these questions that we want to answer. Okay, so effectively what I was saying is that we need to define the events after the reporting period. So that's one of the prerequisites. That's one of the important elements of this standard. Define what is the meaning of event after the reporting period. Up to what date should I go? And what kind of events are we talking about? And second question is that how is the treatment done for such events, right? Should I make adjustments in my financial statements? Should I do the accounting for those when I use the word adjustments? Or should I give a detailed disclosures about the same? Okay. Let's say, for example, very precise example I want to use here is that, let's say there's an ongoing court case, right? Which has been, under litigation for many years. Okay. And let us say that court case decision comes on 25th of April 2021, right? Let's not worry about it whether it's a favorable decision or an unfavorable decision, whether the court, for example, rules in favor of the company, or it simply wants the company to, let's say, pay some penalty. That's not important. We're talking about the event, not about the nature of the event. Okay. So the favorable or unfavorable does not matter. What is important is that something that had been into existence since long, even during the reporting period, there were circumstances that existed on reporting date of this event. Okay, like in case of the court case, and then the decision comes, and of course the company is thinking of comply, or is required to, for example, in this case, comply with those conditions, right? Or comply with the, the judgment as given by the court. Okay, how do we address such kind of events? Okay, so that's one way of looking at, the treatment in terms of these so-called as events after the reporting period. Okay, and the second part is, just in case there is another instance that there is a fire that took place on 25th of April. Now, the fire is an event for which the circumstances did not exist. The circumstances did not exist on the reporting period, or the reporting date, or the end of the reporting period. So how to deal with those events as well? Okay, and that is something which we want to discuss as a part of this particular standard. Okay, so when I say I'm looking at the need for the standard, the key questions that I want to answer: what is the meaning of what is meant by events after the reporting period? There are aspects that we want to discuss. What is the date of approval of financial statements? Something that we will eventually want to answer, or will get very comfortable with the meaning of what is an adjusting event and what is a non-adjusting event, right? And accordingly, how is the treatment of these events being done in the financial statements? And there are specific instances which Ind AS have highlighted that in case something of that sort happens after the reporting period, even that needs to be, of course, dealt with. Okay. And finally, how should these be presented in the balance sheets, and what disclosures are required to be given by an entity? Okay. Now, very quickly looking at the examination trend, it has been examined once for 8 marks in one of the, in the most recent examinations. So it's an important topic, I wouldn't deny, but at the same time, it's a simple and a small topic, right? So one should be very comfortable. It's an easy topic to follow, and only a couple of things here and there need to be understood well, and we can very comfortably attempt any questions that come from this particular question. All right.